Hello, I am Kevin Martini with the Martini Mortgage Group at Benchmark Mortgage, and this is a June edition of the Martini Angle that we are also going to share on the Martini Mortgage podcast, which is also available on the iTunes. And I'm doing this because I believe the information is critical for all to know. Now, if you do not know who I am, again, I am Kevin Martini and the founder of the Martini Mortgage Group at Benchmark Mortgage, which is a community of trusted Raleigh mortgage lenders. And we have been helping families and realtors with mortgage financing since 2006 here in the Triangle of North Carolina. Now, every month, I provide what I believe is a comprehensive walkthrough of the most up-to-date information regarding the real estate and mortgage markets. Now, in this edition, I will share some information that one needs to know if they're seeking to buy, and one needs to know if they're seeking to sell real estate, or really anyone that is in the real estate arena just simply needs to know. Now, the Martini Angle is designed to simply and effectively share what the heck is going on. And with that said, let's jump into the June 2018 edition of the Martini Angle. Now, first thing, let us talk about higher mortgage interest rates. The direction that interest rates have been going is just upward. They were less expensive during the beginning of the year, and now, guess what? They're more expensive. But what you need to know is that experts believe that by the end of the year, home loan rates will start with a 5 and maybe even be in the mid 5s. There's no question that home loan rates are more expensive today than they were in the beginning of 2018. However, they are still in historic low territories, and one might actually call them epic. Now, the Martini Mortgage Group at Benchmark Mortgage are trusted Raleigh mortgage lenders, and we have found that many people, many families that we work with, get confused about what the impact that higher mortgage rates will have on the housing market. In other words, some believe that higher interest rates will mean a shift in the housing market. And I have a news flash, that is simply not the case. Simply put, mortgage rates are on the rise because there is, wait for it, it's coming, a strong economy. And our housing market is very well poised to adapt. It is my opinion, and the opinion of many experts, that higher interest rates are unlikely to materially impact the housing market. To echo my sentiment, the founder of Pulsenomics was quoted by saying, "Constrained home supply, persistent demand, very low unemployment, and steady economic growth have given a jolt to the near-term outlook for the U.S. housing prices. These conditions are overshadowing the concerns that mortgage rates increases expected this year might quash the appetite for prospective home buyers." Wow. Here is Kevin Martini breakdown. Yep, interest rates are going up. However, the rise in interest rates are not going to impact housing because the economy is doing well. Now, I know what you're saying right now. Kevin Martini, who the heck is Pulsenomics? It's a great question. Pulsenomics is an independent economic research and consulting firm that possesses special expertise in the U.S. housing market. So when they say something, many people should listen. Historically, higher interest rates are generally positive for home prices. Are higher Raleigh mortgage rates going to impact demand in home sales in Raleigh? Nope. Are higher mortgage rates going to impact home values in Raleigh? Nope. Let me expand. The last 6 times that mortgage rates increased more than 1%, home prices increased. In fact, 50% of the times, home prices increased double digits. November 2012 to December 2013, home loan rates increased 1.11%. However, home values increased 11%. In June 2003, home loan rates were 1.06 higher than they were in June 2004. And during that 12-month period of time, home prices were up 13%. Here is the Martini factor takeaway. A rising mortgage rate market has not affected the demand, and it will have a positive impact on prices short term being the next several years based on history. Let me shift gears and talk about inventory, and I want to focus on searches versus listings. As a primer, there are basically 3 segments of homes, and they are starter homes, trade-up homes, and premium homes. Now, granted, trade-up homes have 2 subsegments, but a third of the market is starter homes, which is the least expensive homes that are available. It is a minus 6.3% based on data from Trulia. Simply put, there are more searches than there is inventory in this segment. In the trade-up market, there is minus 4.8% less listings than there are searches for a particular priced home. However, the premium market, which is what I want to focus on, the listings are plus 11.1% greater than the searches in the ratio. Now, I have to highlight the challenge at this moment is there is a ton of people out there that want to buy, and they are looking to buy, and there is just simply not enough inventory for them. There are many people, in my opinion, that want to sell their current home. However, they have fear if they sell, they will not be able to find the right place to call home, and they'll have to settle. If this is you, I have a solution. The solution is simple. Buy first and then sell. Now, every week I help families, with the help of my trusted real estate partners, sell in a seller's market and buy in a buyer's market. This is one of the strategies that we have deployed, and we call it buying first and then selling. For more information about this, just give one of our trusted Raleigh Mortgage lenders a call at the Martini Mortgage Group at Benchmark Mortgage. We can be reached by calling 919-238-4934. Now, I know that some families are in a house that no longer meets their needs or will not meet their needs in the future. Perhaps it's too big, or worse, it's too small. However, they do not want to sell because they have an epic interest rate already locked in. Here is the Martini Factor talking point, if this is you. Today, you may have an epic loan rate. However, you will have to move since the current house is not meeting your needs. Let me share with you this secret. If the house is not meeting your needs today, it will not magically meet your needs tomorrow or next month or next year. If you're looking to move up into a more expensive house, or if you're looking to downsize, well, by the way, downsizing does not mean downgrading. You may be paying more money, especially if you have a rate that starts with a 2 or in the low 3s. If this is you, your new home loan will have a higher 30-year fixed mortgage rate. It simply is what it is. There is a ton of suppressed seller demand out there today. To illustrate, in 1985 to 2008, the average tenure in a home was 6 years. In other words, people stayed in their home for just 6 years, according to the National Association of Realtors. During the period of 2008 to 2007, they stayed in their home longer. The average tenure was 9 years. It is my opinion, people do not want to stay in their home this long. I think people are staying in their home 50% longer because they do not know the options they have available to them. I use the word options, not option. Right now, I personally believe that it is time to upgrade. There are advanced strategies where one can buy first and then sell. And there are strategies where one can buy and retain. In this strategy, you can potentially create passive income and rent your current house. This is a killer strategy for many, since I truly believe that real estate is the path to wealth. Also, don't forget about the contingent offer. This option is not appetizing in the starter segment. However, I have seen and helped families do this successfully in the trade up and premium segments with an MBA. Now, what is an MBA? It stands for Martini Buyer Able. When you are Martini Buyer Able, you're able to make a same as cash offer. Friends, in the middle to upper segment, there is inventory. And if you are looking here, you still have your pick of homes. More information on our unique MBA, just either give me, Alex, Logan, or Brad a jingle at 919-238-4934. Let me shift gears and talk about home prices. According to the data from CoreLogic, the year-over-year change in prices in North Carolina was 4.7%. So home prices in North Carolina increased 4.7% over the same time period last year. Nationally, home sales increased 7%. Now, real estate is local, and according to the most recent data from the Triangle Multiple Listing Service, also known as TMLS, which was ending April 2018 at the time of this recording, the change in median sales price was up 6.2%. In closing, I know what some of you are saying. Kevin Martini, many people cannot afford to buy. Listen, buying a home is not right for everyone, nor is trading up or down. However, it is painful to me that many will make their decision based on opinion, or they will make a decision to move or not to move based on what they discussed at the barbecue last weekend with a stranger. I believe that if you cannot afford to buy, you most likely cannot afford to rent either. There are mortgage programs that offer low and even no down payment, and these mortgage programs are available for families that have a bump or a bruise on their credit with the Martini Mortgage Group at Benchmark Mortgage. There is no substitute for knowing the facts, not the opinions. Knowing the facts is critical. I do not want anyone to sell and then buy or buy their first home if they do not want to do it. However, what I am saying, if you are in a rental situation and you would love to own your home but do not know how, then let us sit down and see if we can figure out what is best for you. I am saying if you are currently in a home that either most likely will not fit your needs or does in the next 3 years, or worse, does not fit your needs right now, let us sit down and figure out what is best for you. I know how precious time is, so thank you for taking the time to tune into this episode of the June 2018 edition of the Martini Angle. If you or someone you know has questions about home loan rates or products, please reach out to the Martini Mortgage Group at Benchmark Mortgage. We are trusted Raleigh Mortgage lenders that provide trusted advice in a stress-free environment with great rates and on-time closings while providing a world-class experience. Thanks for watching, and know that you can always reach us by calling 919-238-4934. Again, thank you for tuning in, and please share. Remember, it's not how big the house is, it's how happy the home